And what's going on, CEOs? Welcome back to the channel. Today, we're diving deep into the exhilarating world of personal and business credit. We're about to unveil the secret sauce to scoring six figures in funding. If you've ever dreamt of building that business, of buying that dream home, or jet setting to your favorite destination, well, my friends, then today is your day. Get ready to embark on a financial adventure that will absolutely change your life, because we're about to unleash the power of credit like never before. From building a rock solid personal credit foundation all the way to maximizing business credit, we've got it all covered. And hold on to your seats, because we'll reveal to you the secret sauce to allow you to secure six figures of funding for your business. So grab a notebook, grab a pen, and let's dive in. I know Aaron got questions for sure, but
yeah, I'm gonna just introduce myself, man. I'm a co-founder, part co-founder of Bright Future Credit Solutions. My wife is my better half. We've been in the credit repair industry for 10 years. I got a call center in St. Louis, Missouri. We also got a call center in Atlanta, Georgia. We staff over 10 employees due to the pandemic and all this economic crisis. We went from like 25 and we scaled down simply because a lot of people just don't want to work. And then when it comes to credit right now, what I've experienced is that a lot of people just, to be honest, man, a lot of people just don't care right now because either their hours gotten cut or people can't find good work, or people just trying to make whatever they can make just so they can pay their mortgage or their rent or their car note. A lot of people right now don't want to do too much extra because a lot of people just don't have available funds to do more things. But what happens is that if people put themselves in position to have that good credit part of their life, good credit is basically another tool. It's a wealth building tool that can help you sustain whatever you got going on, and it can also help you from unexpected emergencies. For instance, let's just say we heading to work, right? And we get a blowout, a tire blowout. So let's just say I don't get paid to Friday, right? I don't get paid to Friday. I don't got no cash, because let's be honest, when people working jobs, a lot of us, and including me, I've been there, work paycheck to paycheck. We ain't got $250 to go get a new tire right now. Or some people ain't even got $25 to go patch their tire right now. But if you have that credit piece in hand where you're already ready and you got, let's just say you got a credit card, one credit card, or let's just say you with Toyota, you got a Toyota credit card. You could use that Toyota credit card, have them put a new tire on there, and you pay for that tire, maybe $74 for the next 3 months or so, as opposed to paying it off at that one time, or with your paycheck, your next paycheck, when that paycheck is supposed to go towards your rent or your mortgage, whatever the case may be. So that's what it is, man. The way I like to describe credit is it's a wealth building tool. It's a financial tool that can save you. It's a financial tool that can take you to the next level. Having great credit is a lifeline. And I can truly attest to that, because it was a time where I didn't have great credit. It was a time where I didn't have good credit. It was a time where I was living paycheck to paycheck, and somebody was telling me, like my wife was telling me, man, you need to get your credit together. You need to get your credit together. Well, where I come from, nobody in my family had good credit. Nobody in my family had a credit card. Nobody in my family understood credit or even knew what credit was. Nobody understood that 30% of your credit profile factors into your utilization when it comes to your credit cards. Nobody understood what a revolving credit card was, or an installment credit was. Like, nobody could tell me this, including my parents, my grandparents, and I'm sure some of us on here can probably attest to that as well. Like, I can go to my parents right now and ask them, okay, what's a credit card? They can explain it because they know. My parents did not get a credit card until me and my wife got into the business of helping people restore their credit so that they can build the life that they actually deserve, so that they can send their kids to private school, so that they can be able to live on their own means and, let's just say, book a trip or a cruise on a credit card, as opposed to having to pay it up right away with their paycheck. Credit actually just gives you, it just gives you a sense of relief when you know you got that credit card in your back pocket, and anything happens, anything comes up, you don't have to sit on the side of the road and you're like, man, how am I gonna take care of this? Like, what I'm gonna do. It just give you that sigh of relief, like, okay, all right, I'm good. Like, my paycheck might be gone, but I got $10,000 in available credit where I know I can DoorDash. I know I can go buy my kids some outfits for their recital that they have, or whatever the case may be. So it's one of those things where when I really, really talk about it, I'm really passionate about it because credit is my life. Like, I've built my life off credit because I've helped thousands and thousands and thousands of people maintain a high, healthy credit score to where they're not asking, am I going to get approved? The question is, how much am I going to get approved for? Because we're not going into the bank to see, okay, will they approve me? No, we're going into the bank to see, okay, am I going to do a reconsideration because you didn't give me what I asked for? Or you're going to give me exactly what I need because I know I'm going to get approved. And it's just basically having that mindset that, okay, I know I'm gonna get approved because how many times we went into a dealership and they hit our credit thousands and thousands and thousands of times with us not knowing that they just trying to shop our credit out because they want to give us the highest interest rate so they can get paid the most. So what they're doing is they're taking your credit score because you got your credit hit 1,000 times on TransUnion, 1,000 times on Experian, 1,000 times on Equifax, as opposed to if we just had a little knowledge, what we should have did is we should have just went to our bank, got one hard pull with our bank, and see what our bank approved us for. So now I go to my bank. I know my bank pulls from TransUnion. My TransUnion score is a 767. Okay, my bank approved me for a $60,000 auto loan. What they're gonna do is they're gonna give you that check, right? Get that check from a bank. Now I'm gonna go to the dealership. Because I got this $60,000 check, I got negotiating power. So now you can't put me in a Prius. You can't put me in a Toyota Corolla. You're gonna put me in what I want to be put in, and I'm gonna get it on my own terms at what I want to pay for because I got the check in hand. It just gives you that negotiating power. So having credit is basically it gives you power. It gives you leverage, and it's really important to have good credit because at the end of the day, what are we gonna teach our kids when they get older? Like, I've been in a situation where I didn't have good credit and I couldn't fend for myself or I couldn't do certain things for my kids. And it's like, okay, how am I explaining to my kids that I can't go get them McDonald's? It's something simple as McDonald's, to be honest, because I ain't got cash. I'm living paycheck to paycheck. You know, I know a lot of us ain't living paycheck to paycheck because y'all some true bosses. I know what y'all working with Jeremy, he gonna make sure y'all are boss. But at the end of the day, it's just that sense of urgency. It's just that mindset piece that I'm good. My credit good. Like, I can go run up a bag if I wanted to because, and another thing with credit is it's leverage, man. You can leverage your credit to do so many other things. You can leverage your personal credit to get business credit cards with 0% interest rates. You can leverage your credit to get business loans for your business, especially if you're bringing in cash flow. You can use your cash flow from your business and leverage your personal credit where you're just personal guaranteeing it. The only time it actually goes on your personal credit is if you default on that loan, where you can get two business credit cards with Bank of America with one hard pull. Now you're $20,000 up, and you can use that for operation for your business. Now what you do is you separate your personal from your business. You got a lifeline with your personal credit. You got a lifeline with your business credit, and that's another thing. But it starts off with your personal credit. Your personal credit is the number one foundational tool to you building wealth because it can help you leverage business credit. It can help you leverage other things, other assets. You can have three businesses and you can actually personally guarantee everything on all three businesses. So let's just say you got you got a $20,000 credit card with Bank of America. You could do the same play with business two and get another $20,000 Bank of America credit card, and you can do the same thing with business three. Now you up $60,000 because you leverage your personal credit. A lot of people will say, and a lot of people like, man, I don't want to use my personal credit. I just want business credit without having to use my social security number. Well, at the end of the day, when it comes to business credit, a lot of these lenders, especially in today's economic times, a lot of these businesses will take a snapshot at your personal credit because they want to see the man or the woman behind the business, the man or the woman that stand beside the business, the man or the woman that believes in the business. And they're going to look at your personal credit to see how you maintain everything on your personal credit. Do you have any revolving credit cards? Do you have any installment loans? Do you have a mortgage? What are you doing on your personal side to make me as a lender be able to lend to you? Because if I can't trust what you're doing on your personal side, why would I even give you anything for your business? And it's just, and to be completely honest, well, because I'm a lender, I lend money. I lend money. Me and my wife, we lend to business owners all the time. But we come from it from a personal credit aspect of it. That background helps us a lot because it makes us look at things just like the banks look at things. Like, to be honest, why would I lend you money and you can't even manage a $500 credit card? I mean, a lot of people ask themselves, well, I don't want it in my personal, I want it in my business. Well, you're not even generating any income for your business. You don't even have any business credibility. So why would I give you any money? If you don't have personal credibility and you don't have business credibility, there's no way you can sustain anything that you're asking me to lend you. So that's just, I went off the tangent there, but I just wanted to jump into that because I want you guys to understand that when it comes to credit, it is one of the most important factors of your life. It's a lifeline. Credit, having good credit has saved my life. Not one time, but multiple times. Having good credit has saved my business multiple times. When my credit was bad, I had my wife. She's a lifeline. We leveraged her credit to help build my credit up. So now we both a powerhouse. And what we can do is we can build our kids' credit up. So when they turn 18, they won't ask daddy, can you go buy me a car for graduation? Nah, you got an 800 credit score. You go to the car lot yourself and get your own car because your credit had already been established. And that's one of the things that I try to teach our clients all the time. Well, put yourself and your kids in a position to win. Because if you set up right now, set your kids up to win. So when they do go to college or when they do get that good paying job or if they want to start their business, they got good credit where they can leverage and go get the bank's money and not have to ask mommy and daddy for that money. So that's just one of the things I just wanted to talk about, just to start off.
That's dope. I appreciate that, bro. That was fire. Cool. You want to do like some Q&A or you want to? I see.
Yeah. So let me do this real quick before I go forward. I want to talk to you guys about the 5 factors that goes into your credit profile. So one of the factors is payments. You got 35% of your credit score is payments. So being able to make sure that you have 100% payment experiences, making your payments on time. I don't know if anybody ever had a late pay and your score dropped, but anytime you get a late payment on a credit card, a mortgage, or auto loan, your score can decrease up to 100 points. Like literally, I see it all the time with my clients. I've seen it on my own credit. It happened to me before it passed. Like I had a car note, right? And I missed one payment. It was 30 days late. So let's just say if your car note is due on the 13th of every month. So let's just say today is October 13th and my car note is due. Well, if I don't make that payment by November 13th, you're going to get a 30-day late pay on your credit profile. And it's going to drop your scores up, not exactly 100 points, but up to 100 points. So just keep in mind, guys, to make sure that you're making all payments on time. I don't care if you got to call them and say, hey, I ain't got the money right now. Can I defer that? Can I defer that car payment out towards the end of the loan? Therefore, I don't incur a late payment. If you call them, most times they'll do it for you. Why? Because they don't want to lose you. They want you to keep that car because they don't want to repo that car. Because think about it. If they got to repo that car, obviously it takes about 90 days. If they got to repo that car, they got to get it towed. Once they get it towed, they got to find somebody who's willing to buy that car, a dealership or a private owner. And it's just so much hassle. It's so much easier for us to call our creditors and just say, hey, I ain't got it right now. Think of your creditor as a silent partner because that's what they is. They lend you that money for a reason because they believed in you. So if you call them and you keep an open line of communication with them and just say, hey, I don't got it right now. I'm going through some stuff right now. Like I'm waiting on my check or whatever the case may be. They understand that these are humans just like we are. They want you to keep that car because how they get paid is off your interest. If you ain't paying on that car, and if you're not setting up payment arrangements, they can't get paid off the interest. That's how they get paid. That's how they keep money in their pocket. They ain't worried about the car note. They just worried about you keeping that car. If it takes you 2 weeks to get that payment, if it takes you 30 days and you got to defer that payment, that's perfectly fine. They cool with that. They are willing to do whatever it takes for you because you are the customer. So payments, 35% of your score. Make sure we're making our payment, making sure we're making our payments on time. Next is the amounts that we owe. The amounts that we owe is 30% of our score. So a revolving credit card is 30% utilization. So let's just say you got a Discover card, that's $1,000. You want to make sure that you keep that balance under 30%. What I tell my clients is we want to keep our balance in between 1% and 7%. The reason why I say keep it between 1% and 7%, because let's just say if you do keep it at 30% and your limit is 1,000, but your balance is 300. Well, if your balance reports at $300, that 30% threshold, guess what's going to happen? It's going to look like that balance. It's going to show that that 30% utilization. It's not going to help your scores. It's not going to help increase your scores because your balance is too high. You always want to keep it anywhere between 1% and 7%. Don't ever pay your credit card off completely. If it's $1,000, leave a little balance on there. Why? Because if you pay it off completely, it's going to report at 30%. So now you just wasted money and you just kind of hurt your scores. I mean, you did good, but you still kind of hurt your scores. And that's one of the tricks that I like to teach people is that never pay it off completely. People are like, man, I paid it off to zero balance. Once that statement hits, it's going to report on your credit profile at a 30% utilization rate, even though it's a $0 balance. So leave a little balance on your credit card, 1% and 7%. All right. So the next category is the length of your credit history. The length of your credit history is, I want to say the minimum is 2 years. It's what makes your scores look good. It's what a lender's looking for. And that includes business as well. When you go and apply for a business loan or a business credit card, well, most times they won't approve you anything if you don't have any business credibility or if you don't have a good credit, a personal credit profile, especially if your business has not been in business for 2 years. If your business have not been in business for 2 years, more than likely you may get denied unless you have a healthy personal credit profile, meaning that I'm putting my name on the line for my business because it's my business. I'm not going to mess it up. I'm not in the business to mess it up because I need this money to scale and grow my business so I can build wealth and build legacy for my family. So 2 years is minimum as far as like your length of your history. So let's just say you got a JCPenney's credit card or a Capital One credit card. If it goes over 2 years, then that shows good history, really, really good history. And another thing, let's just say you want to build your credit, and let's just say your brother or your sister has a credit card that's about $10,000. They had that credit card for about 2 years, maybe 3 years. Well, you want them to add you as an authorized user on that credit card. What that do is you get the length of the history for that credit card, which is 2 years or 3 years. You also get that limit. If the balance is low, let's just say the balance is about $1,000. Well, we know that's 10% of the utilization. So that's really, really good. That's going to show up on your credit profile. The years is going to show up on your credit profile. Although it's going to say authorized user, at the end of the day, we just using this to build our credit score. Once we get our credit score to a point where, okay, now we can go run it up and we can go and apply for a Capital One or a Discover or American Express, that's what it's for. We ain't trying to be authorized users forever. We just needed to build our credit score so that we can go apply for the things that we want to apply for. All right. So we got payment experiences. We got the amount we owe. We got the length of history. The next is new credit. Now, new credit, the length of history applies for 15% of your credit profile. So 15% of your credit score is the length of history. So the longer you keeping the account open, the better your credit profile will be. One thing I will tell you guys, because I always tell my clients, never, ever, 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 ever close an account. Now, if the grantor closed the account, the creditor closed the account, by all means, we can't do nothing about that. But always try to keep those accounts open, especially if you got a credit card, a revolving credit. If the longer you keep that account open, the stronger your credit profile look. So let's just say you want to get a house in 5 years. Well, I'm going to build my credit up. I'm going to get me a credit card and I'm going to keep that credit card open for 5 years. I'm going to keep it in good standing for 5 years. I'm going to keep my utilization rate low for as long as possible. Obviously, we know life happens. Life happens. Sometimes we got to run a credit card up to pay a bill. And that just happened. I do it. I still do it to this day. But at the end of the day, the more credit cards you have, the better. Because let's just say you got 5 credit cards and all your credit cards total to about $10,000. Well, if I got a $10,000 limit across all these 5 credit cards, well, I know I can use $3,000 between that 10,000. So if my bills don't even exceed $3,000, I know I can go up to $3,000 and stay under that 30% threshold. If that makes sense, y'all understand it? So the longer you keep a credit card open, an installment loan open, the better it looks on your credit profile. And what a lender likes to see is it's almost like going for a job interview. You go for a job interview, they want to see how long you've been working. Oh, you got 30 jobs within the last 2 years. You bounce around, you bounce around, you bounce around. Well, you look like you're unstable. But let's just say you had this one job for 5, 10 years. It's almost like having a credit card for 5, 10 years. It's in good standing. You look very, very stable. It's not going to be a problem for me to lend you $10,000 because I know you're going to take care of it because you are stable. You got to look at it that way. And that's how I look at credit. I kind of look at credit like it's life. It's really what it is. Your credit is your life. Like what you do with your credit is how the lenders view you. For instance, bank accounts, credit cards, installment loans, how you pay your bills is how they view you. What you do with your credit is your character. Your credit is your character. You can't walk into a bank and tell a bank you need a $50,000 loan so that you can, for your business. Well, they're gonna go back 2 years. They're gonna do a 24-month look back on you. And they're gonna see what you've been doing with your life within the last 24 months. So they're gonna start off with 6. Within the last 6 months, what did you do with your credit profile? Did you apply for a lot of credit cards? Do you have a lot of inquiries? Have your utilization been over 30% or over 50% or maxed out for the last 6 months? Well, we know if it's been that way for the 6 months, well, they're going to deny you. It's going to be an automatic denial, no question about it. But if you've been in good standings for the last 6 months, your credit utilization has been under 30% for the last 6 months, what they're going to do is, okay, there's going to be a preliminary approval. What they're going to do is they're going to go for the next 6 months. So now we're looking at 12 months. All right, what have he or she been doing for the last 12 months? It's like a game. Have your utilization been low for the last 12 months? Have you been applying for a lot of credit within the last 12 months? I tell my clients, we apply for 2 accounts per year. Why? Because what are you doing with your finances for you to need more credit? Now, obviously, let's just say we apply for a Discover credit card and they deny us. That inquiry goes on your credit profile. But guess what? It can be removed. I didn't get approved for it. Let's just remove that inquiry. We remove that inquiry, we build up our credit even more and do it the right way. We go apply again. We'll apply again within the next 3 months, you get approved. So from 6 months to 24 months, you want to make sure that you are so responsible with your credit because they're gonna look back on the last 2 years, what you've been doing. You want to make sure that you got the right healthy credit mix. That's the next step. The types of credit. It's 10% of your credit profile, 10% of your credit score. So that means you need to have a nice amount of revolving credit. And a revolving credit is a credit card, American Express, Capital One, Discover, Bank of America. Installment loans can be student loans, auto loans. You want to have at least five revolving accounts, whether it's a secure credit card, unsecured credit card. You want to have at least 1 to 2 installment loans, whether one being an auto loan or another one can be, let's just say you got a secure loan with your bank. It's okay to have a secure loan with your bank. That's an installment loan. Or student loans. Student loans are also installment loans. One thing that can hinder you guys from being approved is having too much available credit. What I mean by that is, okay, for instance, I got about $100,000, right, in credit cards. $100,000 in credit card, $100,000 in installment loans. My wife has about 150, 200,000. What we do with that, you want to mix it up. So we got store cards, we got revolving credit, which is credit cards, we got mortgage, and we also got installment loans. That's a healthy mix. That makes up 10% of your score. You can have store cards with your credit profile. That's perfectly fine. But you want to have the store card that actually means something. See what I'm saying? If you have a Home Depot store card, that's perfectly fine on your personal credit, because what's going to happen is you start that business, we're going to go personal guarantee with Home Depot and get a business store card with Home Depot. Now, let's just say your personal Home Depot card is $1,000. That business Home Depot card is probably going to be about $10,000. Let's just say you found a property, you want to fix it up. We're going to use that Home Depot card to fix up that property. You're not coming out of any of your own cash, using other people's money to build your legacy. That's what it's all about. So the 5 categories again: payments, 35%, the amount you owe, utilization, 30%, length of history, 15% of your credit score, new credit increase, things of that nature, 10%, and then types of credit, a healthy credit mix, store cards, revolving credit, installment loans, mortgages, things of that nature. You want to have that healthy mix all on your credit profile. And when a lender sees all these different types of mixes on your credit profile, it makes you look credit worthiness. Okay, I'm able to lend to him because he can manage this type of credit card. He can manage this type of installment loan. He can manage his finances because he have a variety of things on his credit. He don't just have one credit card. He don't just have that auto loan. He can manage a variety of things. So it's no problem for me to give him $10,000 because he's trustworthy. Trustworthy. So those are the 5 categories, guys, for your credit score.
That was lit. I appreciate that.
Absolutely, absolutely. Anybody got any questions? I see some of y'all wheels spinning.
So you said you handed out business credit?
Yes.
So
yes.
what is the criteria that you use for getting business lending? Like if it's, for example, if you have a startup business and people want to utilize their personal credits, get business funding, is that something you do, or does the business have to have cash flow before you to do that?
We could do that. So it's 3 things that goes into that: personal credit, collateral, cash flow. You can have one of 3 things. You don't have to have all 3. Obviously, all 3 make sense, but it's always when it comes to not having cash flow and you don't have collateral, that personal credit piece actually helps you. But what I like to do is I teach people that, okay, your business hasn't been in business for 2 years. You don't have the cash flow. Let's build business credibility. You want to build business credit to show that, okay, I can maintain these trade lines on my credit profile. So for instance, you got Quail, you got Uline, you got Granger, you got all these companies that you can actually build business credit up with that shows the lenders that you can manage an account. So let's just say, for instance, Quill. You apply for Quill. It doesn't go to your personal credit. This is strictly for your EIN only. Quill will approve you for $2,000 off the bat. You get a $2,000 trade line that's going to report to the business credit bureaus, TransUnion, Dun & Bradstreet, Equifax, and Experian Business. Once you get that trade line reporting, that's $2,000 that the lenders can see that, okay, I can manage. Well, we're going to get 5 more of those tier 1 accounts. We're going to go with Shirt Seed. We're going to go with Crown Office Supplies. We're going to go with Summa Office Supplies. And we can do BP and Shell's gas cards. So at the end of the day, once you get approved for all those accounts, and you can, it doesn't go off your personal credit, you'll have about $10,000, $15,000 reporting to business trade, reporting as business trade lines. So when you go back to your lender and you say, hey, I want to get this business credit card with Bank of America. Well, they're going to look at the Small Business Financial Exchange and see what type of trade line history that you have on your business credit profile. If you can show that you have $10,000 in these trade lines that you're managing and you're good with that, they're going to see that, okay, he can manage 15,000. Let's give him 25,000. That's how you get around to getting these loans, getting these business credit cards for your business without having to actually personal guarantee, is building up your business credibility. The foundation for your business has to be laid down. But what goes into that is to making sure that the foundation is laid. You have to make sure that you have a DNB number. You got to make sure that you have a physical address, virtual address. You got to make sure that you have web presence. You got to make sure that you have a business telephone number, an 800 number, and you have to make sure that it's listed with the 401 and multiple directories. You have to make sure that all these things are in place, because when a lender gives you, when you're looking for money, right? The lender is going to see, okay, do we have web presence? Do we have social media? Do we have a landing page? Do you have a website? Do we have a telephone number? What's his business telephone number? Not your personal. What's his business telephone number? What's his address? Is his address the same as his personal address? These things make up, these are the little things that get people denied for business funding. Literally, I've been there. And I literally had to sit down with multiple bankers and lenders before I became a lender to see, why do people like us don't get approved? Well, another thing that don't get us approved is our name of our business. A lot of people have real estate in their name. A lot of people have credit in their name. That's what messed me and my wife's business up. We couldn't get funding for our business, for our credit repair business, because we had credit in our name. It's a high risk name. So we had to fund our own business with our personal information. We had to fund it and create another business to have a totally different name, because they look into that. If you got real estate, you got credit, you got finances, you got what's another one? Crypto. Anything in your business name can literally hold you back from getting funding. But the most important piece to getting funding, bro, is literally having a foundational tool. And I got a step-by-step process that I'll send all you guys for free on making sure you're meeting all the fundability data points that'll get you approved. Website, physical address or a virtual address, making sure you're not going with iPostal, because that's a UPS mailbox that doesn't report a physical address. Making sure you have a business telephone number and you listen it with the 411, because at the end of the day, if you were to lend me money and you got to fish around and try to find and figure out who I am, and I gave you a telephone number that reports that to my personal cell phone number, would you give me money for my business? Nope. They won't give you money for your business either. So when it comes to business, you want to make sure that everything with your business is separated from your personal. And that's your second lifeline. Once you start building these trade lines, these tier 1, these tier 2, these tier 3 accounts, and you start building that formation for your business, and you start getting approved for things for your business, you're going to always get approved, because that means you meet every fundability data point. And a lender can't say no to you, because they want to lend to people like you because you got your house in order. That's really what it is. So your personal credit, making sure your personal credit is really, really strong and healthy, 720 credit score plus. It's not really about the credit score. It's about what's on your personal credit profile, which is what I told y'all. Make sure we got 5 revolving accounts. Make sure we got at least 2 installment loans. Make sure we got a healthy credit mix with store cards and things of that nature. Once you have that structured the proper way, and you need the person to guarantee some things, well, we can do that. The only time it reflects us or reports to our personal credit is if we default. Well, we're going to get all this money. We got to have a strategy in place. Well, we know we need it for expansion. I need to hire 3 people. I'm going to go hire me 3 VAs off of Upwork or one of these 5 or whatever these accounts. I'm going to hire me 3 VAs. I'm going to make one of them do the back end work. I'm going to make one of them take calls, and I'll make the other one be my assistant. Now we got the funds in place where I can pay these people to do everything I need them to do while I'm working on the business and they working in the business. And that's what the lenders like to see. The lenders like to see, what you need the money for? Expansion. I want to grow. Well, they want to give you the money to grow, because if you grow, they want to be able to give you more money. And once they able to give you more money, they become your silent partner. You don't have to go to other places like you got people like Funbox, On Deck. You'll be able to get money strictly from the banks, Bank of America, Navy Federal, CD Bank. They'll give you all you need. As long as you're willing to grow and you set that foundational piece and you're doing right by the business, you'll be able to grow. But it starts with building it. It starts with your personal credit. That's number one. I would never shy away from that. I don't care if a business owner, I help business owners that makes over $5 million a month, but their personal credit is shot and they still can't get approved for stuff. They can get cash flow loans, but they can't get approved for stuff because their credit score is a 500. You got a personal credit score of 500. They want to look at you to see what you're doing on the personal side, to be honest. So the first thing is your personal score, your personal credit. Then you build up that business foundation. You build up the business credibility. Therefore, the business can stand on its own, and you will never have to get personal guarantee ever again.
All right. So
I was
start,
answering your question. I know I went out too deep in it.
no, you're good. You're good. So starting off, it's ideal, even if you have a good credit score near 7,800, it's still ideal to build up your business credit, even if you PG a couple things.
Absolutely.
And is it better to go for, and since if you have a strong credit, personal credit, and you're building your business up with all the tier 1, tier 2 accounts, but you want some PG to get funding to get things going kind of immediately, next 30 to 45 days. Is it still a good idea to PG some business credit cards, or
Yeah.
try to get a term loan real quick?
I will say do PG the business credit cards first before a term loan, because it's more, it's a little harder to get a loan than it is to get a business credit card. To get a business credit card, the underwriting approvals is much easier. To get a loan, they need a lot. They might need some documents. They might need some tax statements. They might need some paycheck stubs and things of that nature. When it comes to business credit cards, it's no docs. Even with business line of credit, it's really no docs. So you want to start with the business credit cards first. Why? Because it's easy. You can PG that. It doesn't hurt your personal credit score. It doesn't go on your personal credit score. None of that. It just goes on a business. If you get approved, it goes towards a business. And the best part about business credit cards is that there is no utilization that matters. So let's just say Bank of America give you a $10,000 credit card, right?
Max it out. It's good.
You run a whole $10,000 up. That is not going to drop your credit score.
Right.
Not your business credit score, not your personal credit score. And you can liquidate business credit cards to get the funds as well.
Is there a fee to that?
It typically, so we use a company called Plastique. Typically, they want about 3%. But if I'm trying to get $10,000 off and I'm trying to run it up, I'm cool with 3%. It's not a problem at all. Because remember, with these business credit cards, you got 0% interest up to 18 months, sometimes 20 months, sometimes 22 months. But if you got Bank of America, you got 0% interest up to 9 months. Well, I can run that $10,000 up and I can triple that a couple times before I have to pay it in full. But you can still make a minimum payment. But at the same time, you're using that whole 10,000 and you're using rewards points. You get rewards points for liquidating that card and you running the bag up. That's what it's for.
Got it.
Answer your question, bro?
Yep, you got it. You got it.
Good question, man. Good question.
And that 0% is like the introductory rates for these business cards.
Absolutely, yes. And that's a great thing about business credit cards, man, is that introductory rate. If I can come in at 0% for the next 9 months or 18 months, okay, I'm gonna strategize. I'm gonna do what I gotta do to run this bag up. So when I do start paying interest on it, well, I'd already made money off that card. But at the same time, you're not just getting that introductory. You're also getting rewards points as well, because you can use those rewards points to go fly for free. You could use those rewards points to go stay at Fontainebleau in Miami for free. You could use those rewards points to go book a cruise for free. I promise you, I've done it. Me and my wife do it all the time. So business credit cards, man, it's a gift and a curse, but more so it's a gift. If you do it the right way, it's a gift because you could leverage so many things, especially eating in the Centennial Lounge at the airport. Let's just say you got American Express, a Platinum American Express card. Try taking your kids to the Centennial Lounge and say, hey, we're finna go in here, we're finna get a whole meal. Kids don't want Auntie Annie's. They finna go in there, they finna eat a whole meal. And then the best part about being in those types of lounges, man, you get to network with people just like yourself. Everybody in there got good credit. Everybody in there got good credit. What do you do?
That's my favorite lounge in the whole world. I have the MX Platinum for individuals. It's my favorite lounge ever.
There you go.
I go to the airport like 3 hours early just to get in there.
Right. My plane don't leave till 2. I've been here 6 this morning. I love it, man.
Okay, so next question. I know I've seen companies like you have your business, you have good credit, and they're gonna PG some credit cards where they'll do like, okay, we'll get you the credit cards for 10% of what you get. Are going those ways ideal, or because they know where to go, or is it better to do your own research, understand where they pull, and kind of do it yourself?
Me personally, I like to do things myself because you essentially giving somebody 10% of what you can actually do yourself. All they know is where to go. You could do your own research on these companies and literally Google and find out, okay, what is the requirement for this card? You know, you can make a phone call. You can call the credit department. Like, what is the requirement for this card? What does this card do for me? Is this card good for me? How can I leverage this card? Because you can go PG any business card that you want, and you can get denied, and they send you a statement of why were you denied, or you can simply call somebody and ask them why were you denied. They'll tell you exactly why you were denied. Therefore, you can work on what you need to work on, and once you go back, you get approved. Or if they say you were denied because you don't have a business address, all right, I'm gonna just go to Regis, sign up, give me an account with Regis, give me an address, and I'll reconsider within the next 3 months or so. Well, no, you can with business, you can do it within the next 30 days. So I'll reconsider within the next 30 days and get approved. But I mean, it's solely up to you and your finances. If you want to pay somebody 10% to go get you some money, business credit cards, you can certainly do that. I did that, and I got approved for about $80,000, and I had to pay 10% of that. When I could have just saved $8,000, did my own research, and build my business credit myself, and got my own money. You know.
The only reason I was asking that question is because I know that obviously it's the research, knowing where to go, learning the cards. Like I was looking at someone last week, and they were like, we'll do 5 credit cards, but we'll get you 15 cards within those, because we're hitting either Experian, TransUnion, and Equifax in your personal. So you really get 5 pulls. It kind of saves you from getting like multiple pulls in your inquiry, and then take those inquiries off at a later date. And being that they know where to go, it's kind of like you said, either you can spend a whole bunch of research if you know where to go, or you just have someone do it for you because they know exactly what to do, and it's bam, bam, bam. Or
you gotta be careful with that too, though, because I know a lot of people that actually do that, and a lot of people they'll say they're getting you these business credit cards, but in fact, a lot of these credit cards that they're getting you report to your personal credit profile. They don't tell you that. They'll say, it's business credit card. It's a Discover business credit card. Well, we know Discover reports to our personal credit profile. I don't want a Discover business credit card. Capital One Spark reports to your personal credit profile. I don't want a Capital One Spark. These are cards that typically you can get approved for rather easy. It's a lot of cards.
Capital One Spark, even though it's a business credit card or your personal?
Absolutely.
Oh, wow.
Absolutely. And I tell people all the time, that's not a business credit card. It's a personal credit card. I want business credit card that does not report to my personal.
Yeah, so to piggyback off that, like how do you filter out that information and know for sure, like what's the criteria you look for, like, to just make sure that you're getting the right one?
What I would do is, what I want you guys to do before you apply for any credit card, do your research on the credit card that you're applying for. It's going to tell you where it's reporting. And if you go on with somebody that's going to help you get business credit cards, well, you ask them, okay, what credit cards are you guys going to apply for? Because they are liable to tell you what they're applying for. They'll tell you, okay, I'm going to apply for this First National Bank of Omaha credit card, business credit card. I'm going to apply for a Key Bank business credit card. I'm going to apply for a Discover credit card. I'm going to apply for Capital One Spark credit. They probably ain't going to say Spark. They're going to say Capital One credit card. I'm gonna apply for American Express credit card. Well, before they start applying, you do your research on, does these cards report to my personal credit profile? Where do they report? It'll tell you Discover report to your personal credit profile. It'll tell you that Bank of America will report to Experian or Equifax. Business. It'll tell you that these cards will report to the Small Business Financial Exchange. It'll tell you these cards will report to Dun & Bradstreet. You do your research and just don't let them apply for anything, because I know as business owners, we kind of get sidetracked and we know we need money because we need capital. I understand that, but it'll help you in the long run to know exactly what you're being approved for or you're applying for, because if it does report to your personal, and let's just say life is hard. We understand business is even harder. So if something happens in the business and one of these cars get ran up, and your utilization rate is through the roof, and this business credit card reports to your personal, well, that doesn't just hurt your business. That hurts your livelihood as well, because your personal score just went down. So now I just told my wife I was just going to get her that Audi, and now I can't go get that Audi because my credit score just dropped 160 points. What I'm gonna tell my wife now? And she's gonna be like, babe, this car reports my personal. I didn't know. She's gonna be like, well, you didn't do your research. We know if y'all got wives, y'all know our wife don't want to hear that. But they won't. And that's just an example. That's just an example. But always do your research when it comes to these business credit cards, because a lot of companies out there do help people. They're not all bad. They do help people, but at the end of the day, they doing it for personal gain because they do want that 10%. I can get you approved for $100,000. I can get you approved for a business line of credit for $100,000. I can get you approved for a personal credit loan for $100,000. But that's not going to help you in the long run if it's reporting to your person. Especially if you're trying to buy a home. If you got all this debt on your personal side and you're trying to get a home and you got all these credit cards that's reporting on your personal side, well, your DTI is going to be stupid high. And then one of the other things that we get denied for is too much available credit. We don't want to do that. So ask first, like, what are you guys going to apply for? And once they tell you what they're going to apply for, just do your smart research. Just go to Google real quick. What does Blase report to? What bureaus do it report to? And just pull that credit card up, because on the way, you can go to the website. The websites have a credit card, and it'll tell you the introductory rate. It'll tell you where it reports to. And if it doesn't tell you, you can simply pick up the phone and call them and say, hey, I'm interested in getting this such and such credit card. I want to know what business bureaus do it report to. Does it report to the person? No, this card doesn't report to the person. Well, we know we in agreement.
I got you. Yeah, that makes sense. And then I guess one last question. I do have to run, but last question I'll have is just and then what is there any rhyme or reason as to why my phone dropped off a little earlier, so I may have missed this part of the conversation. I apologize for that. But is there any rhyme or reason at all why utilization doesn't affect your business credit score, like from the business side as opposed to personal?
Well, I've been trying to look for that answer for years. So one thing about the business credit, and I'm gonna be completely honest, when it comes to business credit, man, it's a joke. It really is a joke, because a lot of the things that you apply for, let's just say trade lines, things of that nature, they may not necessarily report to the business credit bureaus unless you call them. Like, you probably have to be on them. But as far as like your question goes, no, there's really no rhyme or reason. It doesn't report your utilization. It's not a factor, because they know businesses go up, businesses go down. This is what I take from it. Business go up, business go down. And they know when it comes to business credit cards, well, they know they're going to give us more of a limit. They know we're going to have to use it for business, for expansion. So they would rather not hurt the business, because on the personal side, if you got credit cards, they know if you're using all that limit over there, it's going to tank your credit score. So I think, to your point, they don't do that because they don't want to really, really hurt the business, because if they give you all this money, they give you 5 times your personal credit limit. If they give you all this money, they expect you to use the money to grow your business, because they want to give you more. They want you to get the $50,000 credit card. They really want you to have that, because guess what? They get paid off that. So to your point, there's no really rhyme or reason that I've been able to discover. I will say that, honestly, it's a plus in our favor because we are business owners.
I got you. Yeah, they're thinking of you as like, okay, yeah, you are a business. A goal of the business is to grow and get bigger, as opposed to a consumer. You're trying to buy things that you can't afford.
Absolutely.
Yeah, not assets. A bunch of liabilities.
Yep. Good question, man.
Yeah, thank you. That was very insightful. Yeah, Terry, thank you so much. Jeremy, thank you for inviting me to the call. I got to run, but really great meeting all of you guys, and good luck to your Steelers.
Yeah, man. You have a blessed day, man.
Yup. Yeah, you guys too, everyone. Good luck to all of you. Thank you so much again. Take care, everyone.
Pleasure.
So I guess I would have a question, because you might say, do you have a list of business credit cards to go for, and what do you charge for that list, for example? Because I know it's not going to be free. So
I got a list, and I'll send it to you.
No, you're the man.
Yeah, I got a list. It's about, on that list, I updated it 2 weeks ago. It's about 40 different banks that you can actually go and look at. You can do your research, pull up the banks. It'll tell you exactly what they report to. And if you're ready, you can go for it. Also, if you
all these reports to your business only, right?
Yep, business only. business only. And also, if you are looking to build business credit, I help with that as well. I got a mentor group where it's really, really affordable. I also have a step-by-step process, a step-by-step business credit portal that walks you through on how to set up your foundation for your business to make sure that you are hitting all the fundability factors. And also tells you like, okay, you need to build trade lines. Let's get some tier 1 accounts. Go apply for this account. Go apply for this account. Go apply for this account. Once you get done applying for those accounts, it'll take you to the next step. Now let's go to the tier 2. Let's go apply for this account, apply for this account, apply for this account, apply for this account. And what you're doing is you're building business credibility. Yes, it is trade line. Yes, we have to pay. But at the end of the day, if I got $20,000 reporting to the business credit bureaus for my business, well, that gives you credibility with the bank so they can see that, okay, he can manage $20,000. Even though we only purchasing 1, maybe 2, maybe 3 items from these companies, we may not necessarily need. For instance, let's just say we go with Quill. We just had a pandemic. For my business, I know I got an office, so I need toilet paper, I need tissue. But when the pandemic shut us down, well, we needed toilet paper for the house. I can only buy so much. So what I did was I bought toilet paper in bulk, build up my business credit. And when I didn't need that much, I started selling toilet paper throughout my neighborhood. So I was making my money back and I was building business credit at the same time. So it's one of those things where if you need help, bro, I got a step-by-step guide that'll take you there. But
because I have my business, I have it set up. I have some trade lines on there. It's the only thing that's not reporting is my Paydex, but for the most part, I have all the steps, virtual address, phone number, website, those kind of things. So I was looking at getting based on some of the next plays I have to do, I was looking on getting a term loan or business credit, but I know business credit's a little easier. I've been doing my research. However, it's a little more challenging to find business credit cards that put to what online compared to like just basic credit cards. It's like someone told me about the secret lenders list. I looked it up, but it was all personal based.
Yeah.
I was like,
that's how they get us.
I tried to hit my personal. I'm like, someone told me it was fixing my credit. And I was just like, I was saying to them, like, I'm looking for business. So I was trying to correlate, like, okay, let me look at this one. Okay. They do business. Okay, cool. What do they report to? Which one do they pull from? So I can strategically pull. So it got a little, it was a little not taxing, but just, it didn't come out as much as I thought it would.
Yeah, so, I got you. It's just been one of those, it's just been an entrepreneur. You trying it, you're testing it out.
Exactly. And this level, and I've done business credit before, but I haven't done it to this level. I want to get to the next, get about 150 in business credit to do some play. And I was looking at just different research in that aspect. And I talked to a couple of people and they're like, oh yeah, we can do this and this. I'm like, okay, well, that's kind of vague. So, that
have
was.
I didn't mean to cut you off. I apologize. Have you ever personal guarantee anything?
Yeah, I did personal guarantee 1 card right now, but it was the Capital One business. And so when you just tell me,
you got another personal credit card.
I was like, dang it. I said, I've been using that card. So, but that being said, I do want to start doing the personal thing. I've been looking at credit unions. I know those are favorable, but I also know that you have to do like I was talking to one guy and he was saying the smartest way to get business credit is to go to credit unions in your area, get a business bank account, checking, and then you can apply for a business credit card and they'll give it to you because you built that relationship relatively quickly. And then I hear other people that are like, dude, you don't have to do that. As long as you're your credit strong, you can PG a whole bunch of cards. You do like 2 or 3, you do 4 or 5 in a small period of time in a short period, or you hit 3 that hits Equifax, 3 that hits TransUnion, 3 that hits Experian, and then you can get 6 cards just like that, no big deal. And you only have 3 pulls on each of your bureaus.
Yeah, and you can actually remove those inquiries too. You could do it multiple ways. I like to teach people to build a relationship with the banks. Why? Because business credit cards are good. That's the starting factor. Yes, but at the end of the day, I want my clients to get revolving lines of credit where the bank is giving you $50,000. You use that $50,000, you pay it back. They give you $75,000. You use that $75,000, pay it back. They give you $150,000. And this is the relationship based. This is how you become the bank's best friend. Like we can get business credit cards all day. We got to liquidate those cards. We pay 3 to 5%. at the end of the day, if I'm getting business lines of credit from the banks, well, rather that's 2%, maybe 1%. And that's cheap money, really, really cheap money. Whereas it's revolving. I can use it over and over and over
Right.
and over again. Now your bank just became your silent partner. You definitely want to bank with credit unions. You want to. So there is a couple of plays you can do with banks. Bank of America, you got Bank of America, you got Citibank. You have Bank of America, Citibank, Chase Bank. These banks are your tier one national banks. Those are the banks you have to, in Wells Fargo. You want to have at least one of those banks for your business. At least one.
You said Wells Fargo, B of
Wells
A.
Fargo, yep, B of A, Citibank, Chase Bank.
Got it.
Those are your tier one national banks. Then you have your tier two banks, your Capital Ones, your Discover, your American Express. Those banks are your tier two banks where you want to have one of those. This is why I'm talking about the healthy mix. This is personal side and business side. Then you got your banks, your credit unions, your tier three banks. There's your Navy Federals. There's your key banks, your Fulton banks. Those types of banks are good banks to really, really build a relationship with. Why? It's because they're smaller banks. Smaller banks like to do business with small businesses, especially if it's a bank that's in the neighborhood. For instance, I'm in Georgia. We got Georgia United, and we got Delta Community over here. Well, a lot of people may not even know about this, but they have great business credit. They got great business products, as opposed to if you go to Bank of America off the rip. Well, I ain't got no business credibility. I know Bank of America probably not going to approve. They're not going to approve me. Well, I've been with this bank in my community. I've been banking with Navy Federal for 15 plus years. Let me just see what Navy Federal can offer me. You know, Navy Federal may give me $20,000 per business line of credit. I'll take that $20,000 right quick, build up my portfolio on my business side. Now, when it's time to go to Citibank or Bank of America, they see that Navy Federal gave me this $20,000. Well, they're gonna want to match that because banks are competitors. If one bank giving you something, they know you got good credit, good business credit. The other bank gonna want to do the exact same because they want your business.
All right.
So it's one of the things I just want to give y'all that real quick when it comes to those banks, like making sure you have at least one tier one national bank for sure. And then you want to make sure you have at least a local bank or a credit union of some sort and build the relationships with every bank that you with. Because when you building up business credit and when you start getting approved for things, what one bank can do for you, you just go to the next bank and they do the exact same thing. Bank of America might just pull from experience, but you might have Navy Federal that may be pulling from TransUnion Business. Therefore, now you got one increase on each, and that's it. But you just got $40,000 in business funding, if that makes sense.
Yeah, then that was the play I was looking at. And since you're talking about inquiry pools, I was having the hardest time as TransUnion as far as taking inquiries off because they say you have to report. They're like, we haven't got the letter, so we can't take it off. They kind of say that.
Yeah, it's so. One of the things about inquiries now is so many people out here teaching 24-hour inquiry of assist removal. So many people out here teaching bad habits of credit repair and all this other stuff. So TransUnion and these companies are catching on. So what you're going to have to do is you're going to have to file a Federal Trade Commission, a complaint to show that, okay, this ain't me. I didn't apply for this. Even if you did, like, we ain't got to tell them everything. I did not apply for this. I did not approve for this. Like, I'm filing a complaint with them. And what they do is they fight on your behalf to get the inquiry removed, and they have 30 days. They will remove it. Well, now 45 days because the pandemic slowed everything down. They will get it removed. So it's not the normal way of calling. You can call and try. It works from time to time, but we haven't been having too much success with calling as of late because they catching on to it. Everybody calling, everybody teaching. Just give them a call. Just give them a call. Tell them that you didn't do it. Yeah, like bro, when I tell you, I've been doing this for 10 years. Since the pandemic, this has been the hardest time to try to get inquiries removed over the phone. So you just have to send a letter and send a complaint. Once you send that letter, after 30 days, if they don't respond, you send a complaint to you send a complaint, and I'll give you the information where you send the complaint to. And what they do is they look into it. If the TransUnion or Equifax or Experian did not comply with what you respond or what you asked of them, then they got to get it removed from the credit profile because they didn't respond.
Okay, because I did it with a client of mine. I was trying to help him out with something because he was going to do it for me, and I got the Experian off relatively easy on the phone. Same with the Equifax, kind of like they work with you outside of the close. And then when it got to TransUnion, there I called a couple times. I'm like, this ain't working. And so I called the dude that told me about it. I'm like, that TransUnion play ain't working. He's like, really? I didn't know that. And I'm like, yeah, man, tried. So I know what you're saying on your part.
Did you call? So when you called, did you ask for the fraud department?
Yeah.
Okay.
I did the fraud part one time, and the other time someone said, "Oh, I can help you." And then I was like, okay. And then that kind of just went the whole spiel according to the Fair Credit Act, blah, blah, blah. And they're like, all right, cool. And they took them off. They're like, well, we can't take this one and this one off because it's part of it linked to an account. And I was like, all right, well then take the other ones off. So they're able to do that. But that TransUnion piece was
I would say keep doing it or keep trying it. I will also say to cover you, send a letter for that, and then also keep calling because they will ask you for that letter. They say, well, you got to fill out a report. We need a purchase report. We need all this. We need all that. Y'all don't need all that because at the end of the day, y'all reporting 100% inaccuracy on my credit profile, and I need it removed. Once you file that complaint, they gonna remove it because they ain't trying to get sued because you can actually sue them for that.
Got it. Yeah, because I had a friend, a client, he had like 42 inquiries on his account over the last 3 years. And I was just like, I was like, you need to get these off. We trying to get them off. And I'm like, I'll try to help you out, man. But
I see that all the time. And I just be real with my clients. I'd be like, bro, you got 100 inquiries. When you got that 20th inquiry and you got denied, did you not think the next company was going to deny you? Like, let's just make it make sense. And sometimes you got to be real with them. Like, if you're not getting approved for one thing, another company is not going to approve you just because you're applying. Like, you just got to do something about it differently. But yeah, man, you got it, man. Just keep trying, bro. For real. It'll work out.
My credits, I'm working on mine right now. I have like 2 inquiries on mine or something like that. So I'm cool. I think I got 2 off. But I'm just trying to build mine back up. But I have like different aspects and partners I'm working with to like do business funding and all that stuff. Eating and all that stuff. So that's why I was asking about the PG stuff because I'm helping some family members do the thing, and also I want to do for myself too. But just finding the right banks to, especially online, becomes quite challenging. So,
what area you live in?
I live in Florida.
Florida.
Tampa.
All right. So I found a lot of banks in Florida. What you can do is you can type in
credit union and the zip code. Well, so I have me in Florida. I have a family member that wants to do some business credit, and he's in Charlotte. Okay. I got another family member that wants to do business credit. And he's in Atlanta, Georgia area. Okay. So I'm helping those two because they're going to give me some money for doing that to get that play going.
That's good. So this is what you do. You go to top, and this is for like when you want to get loans and stuff like this. They do a lot of good startup loans for businesses. Go to top SBA lenders in Florida. It'll bring up a list of banks. I'm looking at it right now. A list of banks.
Yeah.
Yep.
Hold on a second.
Top SBA lenders in Florida. You got TD Bank. TD Bank is a very, very, very good bank. Very good bank. You got United Midwest Savings Bank. You got Wells Fargo. Wells Fargo, it's a tier 1 national bank. You should go there anyway. Because one thing I will say about Wells Fargo give out that bag. I got a client that she has, Wells Fargo gave her, I told her to apply for a business credit card. Wells Fargo gave her a $10,000 business credit card. They gave her a $30,000 line of credit. They also gave her a $25,000 personal credit card. Now, I didn't really, really want her to recommend a personal credit card, but she asked. She didn't have much. She was like, well, should I apply for a personal credit card? I was like, if you want to. They gave her $25,000. So in all, she got about $75,000 in credit that helps her business. Now she was able to go get She able to go to Bank of America and get a fleet of cars. She got a Range Rover, she got a Tesla, she got an Altima. She put all of them on Turo, and now she cash flowing her business like crazy. And she's a traveling nurse. So she making money on the side, and the business is strictly for her kids. And she still got this capital. She called me weekly. She was like, I don't even know what I want to do with this money now. I still got this money. What should I do? What should I do? What should I do? And I was like, well, what's your strategy? Like you have to have a strategy. You want to get more cars, put it on Turo, or you want to start something else? Well, she into real estate. She ended up finding a property, purchased the property with a line of credit. The property was like $20,000. Purchased the property. She fixed the property. She's fixing the property up right now. Once that property is done, she's probably going to make about a $75,000 spread in that property.
Wow.
So, but she also went to these lenders that I'm telling you about, top SBA lenders list, and she ended up getting.
It's I'm looking at. I googled it right now to cut you off. So
Go ahead.
Go SBA loans. Is that what when you look top 50 Florida SBA lenders? And that's 2019.
Yep. Yeah, you should. It should say, because this says last updated February 18th.
Okay, I'm at the wrong.
We got chat in here.
I was gonna say, just to interject, because I want to respect your time, because I know we kept
yeah, go ahead.
a little bit long. Cool. I think Wes also had his hand up for a question also next.
Oh yeah, go ahead, Wes.
Okay, go ahead, Wes.
Well, thank you. Yeah, I had just two quick questions. The third popped up, but I forgot it. It's because one, I work with a lot of folks who are either trying to repair their credit or they aren't really sure when it comes to their credit needs. And the second one is for business credit. So I'll start with that one. I started a business about a year ago with the intention and objective of investing in real estate property. And when I first got started, I went to a lot of resources and I found out that I need to be building business credit for at least 2 years before I can try to use it for a purchase. Is that true?
No, not at all. I have so with my clients, I have a fast track 90-day process to build business credit because it doesn't take that long. It just depends on your finances and what you're trying to do. But you can build business credit rather quickly and start getting approved for things, especially if your personal credit is strong. If your personal credit is strong, you can build business credit within 90 days and literally have trade lines on your credit profile and PG certain things for your business credit, like business credit cards and stuff like that. It doesn't have to take 2 years. No.
Fantastic. I appreciate it, man. And that second question is for like a lot of the folks I work with who don't really understand their credit. What would you recommend for someone trying to improve their credit score by, I don't know, 80 or so points in a year? Like specifically people who are wanting to buy houses because they saw the market tank. I mean, get really good, but start to tank a little bit.
Good question. So personally, what I would say is, first they have to like you said, they have to understand their credit. They got to understand where they're lacking at. If they don't have any revolving credit cards, well, that's hurting them. They're losing out on 165 credit score points just by not having a revolving credit card right there. So if they don't have any revolving credit card, if they don't have any installment loan, we're just going to start from there. Well, they can build their credit with going to what's called Open Sky. Open Sky is a secure credit card builder. They can go to places like Self. Self is an installment loan where they can actually purchase, well, not purchase, but what happens is Self will take about $48 a month out of their account each and every month. They will put it towards that loan. At the end of that loan term, which is about 12 months, they'll get their money back. But what they're doing is they're showing the ability to pay and add an installment loan on their credit profile. With the secure card, they're showing the ability to pay because they're believing in themselves. They're putting their money forward first. That's the first step. If you can manage a secure card, you put your money up about $200 and you make sure that you keep your balance low each and every month. Well, you're building business credit. I mean, that's not business credit. You're building positive credit on your personal credit profile. And after a while, that's going to help you. It's going to help increase your score to about 70 points or so. I'll say they probably need to do 2 secure cards if they don't have anything. After a while, after that 12 months or so, not even 12 months, after 6 months, that score goes up. They can start applying for like Capital One, Discover, things of that nature. If they can get their score above 700, I can send them a link and they can get approved for Discover right away. And with Discover, they'll give you can do a pre-approval where it won't hurt your credit score. You apply and they'll tell you instantly if they're approved for a secure card, or it'll tell you instantly like they're approved for $10,000. Take the 10,000, now you up 10,000, and it's going to help their credit score.
And Gary, I really appreciate that, man.
For sure.
Like I actually did just remember that third point.
Okay, go ahead.
Like I mentioned, I work with a lot of people, and in my field, it's important to know a few accountants, but I haven't run across people who do professional budgeting and professional. I've run across some people who do professional like credit repair, things like that. But how do you onboard clients, or like what's the best way to get someone in touch with you and like kind of give them an idea about how you work?
So what they do is they can go to the website, or I can send them a link, and they can schedule a free consultation with me or anybody on my team. And what we do is we do a credit analysis with them. We go over their credit report, and we don't just go over their credit report. We make them understand their credit report. We make them understand a derogatory account, a collection account. We make them understand what's a good account on their credit profile versus what's a bad account on their credit profile. We go into detail about their personal information on their credit profile. If they got multiple addresses that's reporting to their credit profile, well, they look unstable. So we try to remove the addresses that's not on that shouldn't be on their credit profile, so that you can show one address. Therefore, a lender sees that and they say, okay, he's stable. We go over the variations of their names. Now, if their name is reporting West B on TransUnion, and it's reporting B West on Equifax, and it's reporting West Lamar B on Experian, well, that's different variations of the name. So we erase all the different variations of the name and make sure one variation of the name is reporting, one variation of the date of birth is reporting, one variation of the address is reporting, one variation of the employer is reporting. Because why? If they got accounts that's linked to any old addresses and we remove those accounts, that negative account may come off their credit report without even having to dispute it. And then we also teach them on how to build personal credit, personal positive credit, and how to maintain personal positive credit. We also help them budget as well. So their finances, what they're doing with their money, we make sure every month we have what's called a client monthly review. We go over their personal credit profile every month. If this month we told you to get your credit cards down below 10% and you hadn't done it and your score is steady dropping because your score, you keep maxing it out, well, we know that's your problem. You're not doing something right with your money. So let's get to the meat and potatoes of what you're doing with your money. Are you eating out too much? Like when we talk about credit, it's not just credit, because budget goes into credit. Like in order to have great credit, you got to know how to manage your finances. You got to know how to manage your money. So we also offer budgeting as a tool as well. So they get coaching with us, they get budgeting with us one-on-one, they manage their finances, they build personal credit positively with us, and they also get a friend with us, because at the end of the day, when you become one of our clients, your goals become our goals. Because at the end of the day, if you told me you want that house, by God, by all means, I'm going to help you get that house, because that's my goal now.